Good morning, everyone. So today we are going to start FAR 8. In this FAR 8, we have two topics. One is cash flow statement of cash flow. Another we have consolidation, right? So earlier under financial statement, we were supposed to prepare income statement and balance sheet. Now cash flow statement is also a required financial statement. It's a part of financial statement along with your income statement and balance sheet, right? So first of all, this is required financial statement, right? Now, when we talk about income statement, right? When I speak of income statement, so basically when I speak of income statement, it means I'm here to calculate the net profit, right? The net profit oblique loss. Now, when I talk about balance sheet, it means I want to ascertain the financial position, okay? Now, when I talk about cash flow statement, what do I mean by it? Right? So basically here we will be identifying the application and sources of fund. Right? From where we have got the funds and from where we have actually applied it, right? Right? From where we have received cash and cash equivalents, right? So basically it's a source and application of fund, like we talk about cash receipts and cash payments. Now every time whenever we are staying in some other city and we are doing some job, and suppose I am earning a salary of $10,000, then in that case my parents would always ask me, what have you done to your salary income, right? So salary is my source of income, source of fund, and where do I have actually applied it? First month it went on giving parties to my friends, right? Second month I bought some home utensils and all, right? So these are applications. So when you talk about cash flow statement, your business activity, right? Your business activity is basically categorized in three parts. One is your operating activities. Like when I talk about operating activities, I am talking about principal revenue generating items, right? Like collection from debtor, payment to creditors, all these things. When I talk about investing activities, right? This is completely FAR 3, like investments plus fixed assets. Another activity is financing activities. Here we'll be talking about common stock, non-current liability, that is loans and all. Now why I'm dividing my business activity in three categories? The reason basically I want to know, first of all, cash flow statement is prepared in order to identify from where you have got the funds and where you have actually applied it. Number one. Number two, cash flow statement is prepared to identify the changes in your cash and cash equivalent. Now what is cash equivalent? I'll come to that later on. But cash means, suppose I had a cash of say $50,000. At end of the year I am having a cash of say $75,000. So there is an increase of cash of 25,000. So from where do I got it? What is the source of this increase in cash, right? So basically this cash flow statement is prepared to identify the changes in cash and cash equivalent, right? The ultimate objective is to determine changes in cash and cash equivalents, or rather to find out the right? And this part is separate. Okay. Now, suppose I have got $20,000. Right. Suppose I have got a salary of $20,000. Right. This is my salary. Now, what I have done with this salary? Sir, there was a loan. I have repaid that. It means this is my application minus $20K. So my parents can easily make out of it. So whatever my son has earned, he has applied it in repaying the loan. Or what he might have done, or he might have got some car, right? So I have purchased a car, say for $20,000. It means whatever is your operating activity, this is your source of fund, and you have applied this source either in paying a loan or creating asset for your investment for you. So here we will have positive cash flow. What we will have here? This is my positive cash flow, that is receipts, and this is my negative cash flow. Okay. So this is related to my production and selling of goods. This is related to production and delivery of goods, right? This is my principal revenue generating items. This is my bread and butter, right? This is my hard work which I am putting up. Like for a farmer, agricultural income will be his principal activity. Without this, I cannot survive. Any business cannot survive without this, right? So sir, don't you think that this is purely your income statement items? Yes or no? Don't you think this is purely your balance sheet items? Same is this. So operating activity means what cash you have generated during the year. See, if anyone asks me what is cash flow statement, okay, fine. It's a statement showing cash receipts and payment. That for that you prepare cash account also. Why cash flow? If I tell that cash flow statement is prepared to identify what are my cash receipts, what are my cash payments, so that you can know from cash account also. What is the use of preparing statement of cash flow? You are preparing statement of cash flow to identify the source and application of fund. For that you have categorized the entire business activity in three parts. Okay, fine. From this source I have got the money and this I have applied it. Are you getting my point? So this cash flow statement is also prepared to identify the changes in your cash. There might be a case that I have generated 30,000 and 20,000 I have applied. So what is my changes in cash? 10,000. It means my closing cash will be more than the opening cash by 10,000. Are you getting my point? So if it is related to my bread and butter, if it is related to my hard work, if it is related to my revenue generating items, this is what is generated during the year. Inflow, outflow, related to purchase and sale of goods, payment of normal expenses, all this will come under operating activity. This is related to my investments. This is completely related to my investments. This is completely related to my financing, loan, borrowing, sources of fund. Now there might be a case that this is positive and this is negative. What does it mean? If this is positive means financing, positive means you have got the funds. And when do you get funds? When we borrow or when we issue common stock. So like when it is positive, it means this is issue. And why you have borrowed the funds? To purchase some non-current asset. That non-current asset you will put up and you will generate this operating activity. Ultimately it starts here. Financing you borrowed. This is purchase of non-current asset. When you utilize this non-current asset, when you use up this non-current asset, you get operating activity. Again, this operating activity is used to repay this loan. It's a cycle, man. Very effective financial statement. It gives me proper source and application. Right? That is why this is required financial statement. Highly important. Is it okay, everyone? Right? Now when I talk about the format of cash flow, when I talk about format of cash flow, so basically we'll be talking about cash flow from operating activities. Cash flow from investing activities. Financing activities. So we get net increase oblique decrease in cash. Right? Plus opening cash and cash equivalence. So ultimately we will get closing cash and cash equivalent. This is my net change. When I add opening, I get closing. Simple. Now what comes under cash and cash equivalent? This is main. Short term, highly liquid investments. Right? Held for 3 months or less. Easily convertible into cash. These are some characteristics. right? Insignificant changes in value. Now generally the fair value of these investments are not that highly volatile since the period of holding is very less. So during this time period the changes in interest rate won't affect the value of the bond. When the value of bond is affected, I have told you FAR 4, when the stated interest rate is more or less than the market interest rate. So since the time period is very less, you won't have that much volatility. Hmm. No. In opening you have cash balance. Short term investment is also cash. Because if I want to convert this into cash today, I can do it today itself. This is liquid market. So this is almost cash. Like debtor is not almost cash because you have to go and chase. No requirement for chasing. Highly liquid market. Lot of buyer seller, you can easily sell it today and get your money back. Right? Now, what comes under operating activities? This is my question. Anything which is neither financing nor investing? Remember one thing. Neither financing nor investing. We have collection from customer for sale of goods, either cash sales or credit sales. Payment to suppliers for purchases. Payment for expenses. This is like payment for COGS. This is like selling and general administration. SNGA. This is selling, general and administration. Operating expenses basically. Then we have payment for income taxes. Investment in HFT. investment in HFT is also operating activity, like purchase oblique sale of HFT. HFT means held for trading, not AFS and held till maturity. Not AFS oblique held till maturity. This is not operating activity. Right? Interest received, interest paid, dividend received, like payments for lawsuit, any refund to customer. Basically, it should not be investing financing. Refund from supplier, right? Lawsuit, pending litigation. So basically, when I talk about this operating activity, I mean to say income statement items plus current assets plus current liabilities. I will just show you why current assets and current liabilities also we need. I will just show you in some time. But remember one thing, when I talk about current liabilities, exclude notes payable and short-term debt. Basically, it will be covered in financing. Notes payable and short-term debt will be covered in financing. Because debt is like loan arrangement. This is not related to your purchase and expenses paid, right? Means when I talk about current liability, I have to take provision for taxes, I will take creditors, I will take outstanding, but I will not take notes payable and short-term debt. Notes payable can be non-current also. If it is non-current, then no problem. If it is current, then also I am not going to take. Is it okay? Done. Now when I talk about investing activities, so this is generally what? Non-current assets. And when I talk about non-current asset, it can be investments, not short term. It can be tangible asset. It can be intangible assets. Right? Now what will come under investing? Loan to others, oblique, collection of principal. Now when I am giving loan to others, it means they will give me interest also. But that interest which I am receiving is operating. But loan which I have given, that is investing. The principal part. AFS held till maturity, purchase and sale of AFS and held till maturity. Acquisition and disposal of property, plant and equipment and intangibles. Acquisition oblique disposal of property, plant and equipment and intangibles. Financing activities. Right? So this is debt. Now debt can be non-current liability. Debt can be current liability. Remember, from current liability I excluded note payable and short-term debt. It will come here. Note payable plus short-term debt. So debt and equity is being covered here. Borrowing arrangement. Right? Proceeds from issue of bond So this is positive cash flow. Payment made for retiring bonds. Payment for retiring bonds. However, interest which we are giving, that is operating activity. Now when I talk about retiring bond, prepayment is also covered. Right? Debt extinguishment cost. Suppose I have issued ZCB. इसका फेस वैल्यू इज सपोज $1 lakh. Now at what price I will issue this? 62K. So this is what? Financing activity. Positive cash flow. Issued at discounted price. Deep discount. Maturity. I will pay 1 lakh. This is payment which I have done, yes or no? So this is negative cash flow. Remember one thing. To the extent minus 62K, this is financing activity. And this 38K is nothing but effective interest paid. Indirectly, this is accreted interest. So this is what? Operating activity. Because this is what you have collected. For ZCB, this is the principal value. Along with effective interest, you are paying 1 lakh. So principal plus interest is equals to maturity. So principal is financing, but interest is operating. Is it okay? When you borrow a loan, repay a loan, this is also financing. Equity issue, reacquisition. Right? So when I issue, this is positive. Reacquisition, this is negative. Dividend paid to shareholders. Done. Right? So as of now I have explained you what will come under operating, what will come under investing, what will come under financing. Now I will give you a small chart, right? In that chart, you have to just tell me which will come in operating, which will come in financing, right? And there can be some non-cash items also, so you have to say that also, right? Okay. So let us make one table of 5 columns. Right? So this is a transaction list I will give you. This is OA. This is IA. This is FA. This is no cash flow. I'll give you transactions one after the another. The very first one. Sale of goods and services. You just keep on marking, okay? I'm just giving you. Purchase of supplies. Payment of taxes. Purchase oblique sale of trading securities. Purchase oblique sale of PPE, intangibles, oblique investment. Right? Depreciation, oblique amortization, oblique depletion, interest received, dividend received, income reported under equity method, right? Now tell me, this is very simple. If I see the first one, it is operating. This is also operating. Payment of taxes is also operating. Trading securities is also operating. This is investing activity. This is not a cash flow. It's a non-cash item. No, cash is not going because of depreciation. What are you saying? Interest received is operating. Dividend received is also operating. Now you have done investment. Under equity method, what we do? Investees earnings, my share I report and increase my value of investment. Remember, under equity method. So that is also not a cash flow. Trading securities. right? Then we have dividend paid, purchase of treasury stock. Both this activity will be what? Financing. Purchase of treasury stock, yes. Is it okay? Okay. Now, when I prepare cash flow, so basically I have to find out receipt and payment. If this receipt is related to operating, I'll put in operating. If it is related to investing, I'll put in investing. If it is related to financing, I'll put in financing. Now, investing and financing is not a big deal because purchase and sale of non-current asset, investment, intangibles you can easily get, like purchase and disposal. Whereas in case of financing, the amount you have borrowed, the amount you have repaid, that is also easy to find out. But at times it is difficult to find out your operating activity because the operating activity can be done by two methods. One is the direct method, another one is the indirect method, right? So next is computation. Cash flow from operating activities, right? So this cash flow from operating activity can be done in two ways. One is the direct method, another one is the indirect method. Basically, under direct method, what will happen? We have to prepare various accounts. We have to prepare various T accounts to get cash flows. And whereas in case of indirect method, from net profit, we will get cash flow from operating activities directly. Here we have to prepare a lot of T accounts. Like, suppose for trade receivable, they will give you opening closing. And they will give you credit sale. So if I prepare one debtor account in T format, debit side, credit side. In debit side, I write the opening balance, I write the closing balance. Credit sale, I will write on the debit side. This collection will be the balancing figure. That collection I will take when we prepare cash flow. Got my point? Are you getting my point what I am trying to say? So when we talk about direct method, so we have to prepare a lot of T accounts. And when we talk about indirect, Don't have to prepare any T account. Straight away from net profit you can get. There are a lot of some adjustments we have to do. So I'll give you one problem. With the help of that problem, we are going to do both the methods. Okay. So write one example. They have given you one income statement wherein they have given you sales, COGS, selling expenses, G&A expenses, depreciation, interest expense, equity in earnings, income tax expense, gain on sale of AFS. Right? So this is dollar 1500. This is negative 500. Right? Selling expenses 250. This is 100. Now this is, here we have bad debt 50. Okay. In selling expense we have $50 bad debt. Depreciation we have 125. Interest expense we have 75. This equity earnings is we have 25. Income tax expense is 150. This is 25. So now we get income from continuing operations. Right? This is my net income. Can you just do it for me? It is coming to 350. Now they have given you some balance sheet changes also. Increase in AR, increase in inventory, increase in accounts payable. This is 200. This is 75. This is 50. Increase in allowance for uncollectible debt 50. Increase in accumulated depreciation 125. Basically opening minus closing they have given us. Decrease in bond discount. It means some part of the discount has been written off. Increase in investment. Right? This is 15, this is 25. Decrease in deferred tax liability. Right? Then we have increase in tax payable. Now we have to find out relationship of these income items, income statement items with these current assets and accordingly get the cash flow. Can you read it? Done. No, no talking please. Right? Now, I need to find out some relationship. Now, sales had got some relation with accounts receivable. Isn't it? Means debtor and credit sales. If nothing is mentioned, I will take it to be credit sales. So this is one, it has got matching with this. Now what I have to do with this? Simply, we have to prepare one T for AR. Now it's an increase. Usually I write opening here, closing here. Asset always have a debit balance. So this is increase means I will write here and make it 0. Though it is not 0. If this is 100 then this is 300. If this is 150 then this is 350, whatever. But I have written it like increase means the figure will come in closing, not in opening. Now I have a credit sale of 1500. So don't you think cash 1300 is the plug? This is what? Cash collection. So this is one done. I can do journal entry for this. There was a sale of 1500 credit. AR debit 200 because this is increase means debit. So cash is how much? 1300. Done. This COGS has relationship with both inventory and accounts payable. They are both brothers. This inventory will come under current asset. Accounts payable is coming under current liability, but both have a brother relationship. If I have to show you, see, I have got this cash collection. Now, if I draw inventory, again this is asset. Opening here, closing here, always debit. Right? It is increased. So I will write here, this is 0. Now COGS means outflow. This is what? Outflow of goods. This is inflow of goods. So COGS is outflow how much? 500. Yes or no? So I will get purchase 575. Balancing figure. Here this is the plug. Here this is plug. Now this plug I will put in accounts payable which will have a credit balance. So opening will be here, closing will be here. It is also increase, you can see. So I will put 50 here. This purchase which I have got, it will increase my accounts payable. That is why these two are regarded as brothers. Because once you know COGS, I will get purchase. This purchase I will put in accounts payable. Then I will get payment for supplies. Payment to creditor, payment to supplier. So ultimately how much is cash paid? 525. Done. So what will be the journal entry for this? See, very simple. Like sales was income credit, COGS is expense debit. Done. Inventory has increased or decreased? Asset. Debit 75. Accounts payable has increased or decreased? Increased, and accounts payable has a credit balance. So AP will be credit 50. Difference is what? Cash plug 525. So I can do it this way, na? I can do it this way. What's the problem? Right? Is it okay? This selling and distribution expense is 3. And this allowance is bad debt, right? This is 3. Now we are not going to do in T format. Let us try this journal format. What is this journal entry format? Very simple. Selling expense is what? Expense debit. How much? $250. Isn't it? This allowance has increased by 50. Now I told you, when it is as a percentage of accounts receivable, first we will get the balance sheet figure. Balancing figure will flow to the income statement. So this is balance sheet figure. Net is increase. So this is the change. So this 50 will flow to income statement. This 50 and this 50 is same. It means out of this 250, allowance credit is 50. Why I have shown an expense of 250? Because 50 is allowance. Remaining is cash paid, plug. Isn't it? Yes or no? Allowance credit I have done. Because it's increasing now. Allowance has credit balance. Allowance has credit balance. So this selling expense of 250 is including this 50. So how much is cash paid? 200. 200 cash paid plus allowance will give me total selling expenses. So what I will do is that, I'll request all of you to try this at home. Right? There are few points. You try this at home, and then next class when we come back, we'll discuss this again. Right? Thank you so much.